Bitcoin is doing something right now that every bear market investor should be paying attention to. Because right now, Bitcoin is following the 2018 bear market extremely closely. And if that comparison continues to hold, then Bitcoin could be heading to a temporary low here sometime in June before we see a significant rally later in the summer. Now, before you say every cycle is different, I agree, but when you start comparing things side by side, things become a little scary. Let me show you. Bitcoin looked for a period like it was fully breaking out and actually managed to break above its bear market resistance band on the weekly time frame. But this breakout was short-lived. We quickly came back down from it and have now seen a close back below it, meaning that it's once again acting as resistance. So what slowed Bitcoin down despite breaking above a key resistance level? Well, another key resistance level, just on a smaller time frame. On the daily time frame, Bitcoin got rejected from its 200-day moving average, which has been key resistance throughout Bitcoin's previous bear markets. So despite briefly breaking above a key resistance level, Bitcoin just ran into another resistance level. And that's important because I have talked about before how June could be a key turning point for Bitcoin. Depending on how we ended May and went into June could decide a lot of things. Now the high came on May 6th. Since then we first moved sideways, but now the downside is starting to play out exactly like we have been talking about. And if that continues, it could suggest a temporary low here in June. Now here is where things start to get interesting. The crazy thing, if we get a low in June, is just how closely Bitcoin continues to follow the 2018 bear market. And I know cycle comparisons aren't perfect, but let's compare the dates. Back in 2018, Bitcoin put in its first major temporary low in early February around 6,000. Fast forward to this cycle, Bitcoin also put in its first major temporary low in early February. Only this time it was 60,000. Different price, same timing. And when I first noticed that, I thought it was probably just a coincidence. But then the March rally lined up, the April pullback lined up, the move into the bear market resistance band lined up, and then even the May top that went into the bear market resistance band lined up. It's not often you see this many important turning points occur at nearly the same time across two different cycles. But here is what caught my attention. Both rallies topped in early May again. Almost the exact same timing, and after that both markets rolled over. Now if we just continue using this pattern that has been surprisingly accurate so far, then that would suggest a temporary low sometime in the middle of June. And that's where things get even more interesting. Because the June low in 2018 wasn't just a low, it was actually a retest of the February low. Bitcoin came back down to around 6,000, formed a double bottom and then rallied off it. Now think about what that could mean today. The February low this cycle was at 60,000. So what if Bitcoin comes back down during June, revisits that area, forms a double bottom and then rally off it? That's one of the main reasons why I'm watching this $60,000 zone so closely. Now Bitcoin is probably not going to hit 60,000 exactly. Markets rarely work that perfectly. It could be slightly above or it could be slightly below, but the broader idea is what matters. A retest of the February lows before we see a rally off it. And if that's what ends up happening, it would actually make a lot of sense from a market psychology perspective. Because by the time Bitcoin gets close to those February lows, a lot of people will probably assume lower prices are coming. That's usually how these retests works. The market starts testing people's conviction And if enough fear enters the market during that time, it could create the exact type of environment where Bitcoin forms a temporary low before it gets a rally off it. And 2018 isn't the only bear market that points to a temporary low in June. I said that June has been a key turning point. And the other bear markets we can look at where June also ended up becoming a temporary low is the most recent one, 2022. Back then we also dropped into June and found the low around the middle of the month. So whether you're looking at 2018 or 2022, both point toward June being an important month. And just based off that, middle to late June could be the time where this downside ends for a period, potentially around the 60,000 region. But let's try and look further ahead, because what if we get that low in June? What happens next? If we take the 2018 example, since it has been the most accurate so far, then Bitcoin rallied after the June low and eventually topped out in late July. After that, the market spent some time moving sideways before eventually getting its final drop and putting in the bear market low. Now let's compare that to 2022. This time the rally lasted until the middle of August before the market once again started moving sideways and eventually rolled over into its final decline. So now we have two periods worth paying attention to: late July and the middle of August. Those are the windows I'll be watching if we get that low here in June. Now the question becomes, is there any level for this rally that lines up on these time frames? The closest thing I could find was the Ikimoki cloud on the 2-day time frame. In both 2018 and 2022, Bitcoin ended up testing the lower part of the cloud before rolling over again. Right now that level sits around 70,000. By the time we are in July or August, that's probably going to be higher than it is right now. But it gives us a rough area that's worth paying attention to if Bitcoin starts to rally from a June low. And remember, for me, the time frame is more important than the exact price or level. We also talked about how the price tends to move sideways after a Q3 top. And I've mentioned before how these bear markets tend to last around 1 year from the bull market top. That's one reason why October this year still makes sense to me. Now it's difficult to compare exactly to 2018 and 2022 because those bull market tops happened later in Q4 compared to 2025, which was early Q4. But I still think the period following the Q3 top could involve with some sideways price action before we eventually break lower and then finally see the bear market low around October and hopefully start seeing more green candles on the chart instead of red ones. But yeah, this is just a guess on how things could play out. I think comparing to 2018 still makes a lot of sense because of the similarities so far. At some point it will probably stop lining up, but until then I don't see any reason to ignore it. And right now that comparison suggests a temporary low in June, potentially around the $60,000 area, plus minus a few $1,000s. Of course, again, it's probably not going to be perfect 60,000, but you get the point. So let's see how this turns out. Let me know down below what you're watching and what you think of this 2018 comparison. And if you enjoyed this video, remember to like and subscribe, and also comment down below what I can do better. I love to hear some feedback, and I'll see you guys in the next one. And remember, the markets reward patience long before prediction. Peace.